my name is Maura Connor, and I'm the Assistant Director of Student Financial Aid and Graduate Professional Programs for the Office of Student Financial Aid for the University of Toledo. Today, we will be talking about how to finance your graduate education for the DPT program. On today's agenda, we'll be talking about how to fund your graduate education, going over topics such as financial aid eligibility, repayment and forgiveness programs, the costs of loan, student loan repayment options, scholarships, managing debt, in-state residency, and some financial literacy resources. There are a few primary ways to fund your education. First, there's the federal aid, or the FAFSA, free application for federal student aid. There are also scholarships. Scholarships is considered to be free money, which is the best kind of money, something I always encourage to utilize whenever possible. And lastly, there are assistance repayment programs, and we'll be able to go over all of these topics together. As a graduate professional student, your financial aid is going to look very different than what it looked like as an undergraduate student. You are now considered to be an independent student where parental information is no longer required on the FAFSA. Parent Plus loans are also no longer available. However, Graduate Plus loans are now available, but only through the student. State and federal grants are also no longer available, nor are subsidized loans, but unsubsidized loans are an option for graduate students. Now let's dive a little bit deeper into the financial aid that will be offered to you as a graduate student. You will be offered both the unsubsidized loan and Graduate Plus loan. The unsubsidized loan is not credit-based, and you are offered that loan simply by filling out the FAFSA. You can expect to be awarded $20,500 for the 8th year, and currently there's an interest rate of 7.05% and origination fee of 1.057%. The Graduate Plus loan is a little bit different, as it is credit-based, and you do have to apply for it. If for some reason you get denied, you can get an endorser, basically like a cosigner. You apply for it on studentaid.gov, and you cannot exceed the cost of attendance. Its current interest rate is 8.05%, and the origination fee is 4.228%. Something to note, though, is that interest rates and the origination fee are set by Congress and changed every year. The interest rates listed above are valid until July 2024, and the origination fees are valid until October 2024. We'll be able to get the new rates this summer. As a loan borrower, it's important to note what the lifetime loan limits are. As a graduate student, your lifetime loan limit for federal loans, so subsidized and unsubsidized combined, is $138,500. Currently, there is no cap on the Graduate Plus loans. However, I really hope to avoid you taking out that much loan money so we can minimize your loan debt and make it easier to pay off your loans in the end. Now let's talk a little bit about forgiveness programs. The first program I want to go over is the Public Service Loan Forgiveness Program, or PSLF. If you want to look more into the information and details about this program, I have included a link. However, essentially, with this program, if you make 120 total qualifying payments, which, if made consecutively, ends up being about 10 years worth, and you're on a qualifying repayment plan, such as an IVR plan or the SAVE repayment plan, and you work full-time for an eligible employer, then the remainder of your loan debt can be forgiven, and the amount that is forgiven is not taxable. There's also the Income-Driven Repayment Plan Term Forgiveness Program, which is not my favorite. First, there's the IBR, Income-Based Repayment Forgiveness Program, which you can receive after 20 years of making payments, on-time payments, while on this repayment plan. Then there's also the SAVE plan, which you can receive forgiveness after 25 years. However, on both of these plans, forgiveness on these are taxable. And if you've never had to report money that's not yet been taxed on your tax return, it's going to be a lot of money that you will have to pay out of pocket simply for the money that has been forgiven. So I strongly encourage that if you're going to go for forgiveness, I recommend the PSLF route over an income-driven repayment plan term forgiveness route. Here, I've included just some federal loan costs in regards to the interest rates and origination fees. I don't expect you to memorize this. I don't expect you to understand this every single year and how everything works, but I do want you to be at least educated on what you are accepting. Note that both the interest rates and the origination fees can change every single year. I just want you to know what they are, and if you have questions about them, please email us and we'll be able to kind of walk you through the process. I don't expect you to be some kind of expert in financial aid and loans by any means, but I do just want you to be educated in your financial aid. Now, I want to get into the cost of a graduate loan, just to give you an idea of what it means to take out loans to the Department of Education. It's important to note that due to recent changes from the Department of Ed, unsubsidized loans no longer have interest capitalization, but Grad Plus loans still do. Let's look at the unsubsidized loan first. So first, you can expect with a $20,500 unsubsidized loan, there's a 1.057% origination fee. What this means is that about $217 of that loan will not be applied towards your bill. Instead, it will be sent back to the Department of Education as a fee. You can also expect that with that same loan at a 7.05% interest rate, about $1,400 of interest will accrue every year. That's about $100 of a month in interest. To give you a bit of an example of a 3-year grad program, and let's say you take out $20,500 over 3 separate school years for a total of $61,500. You'll have a total of interest charges over that 36-month period of $8,640. That means that over a 10-year period, you can expect about $14,400 to accrue in interest alone. But let's compare some apples to apples with the Graduate Plus loan. Let's say you take out the full $20,500 also in a Graduate Plus loan. You can note that it has a higher origination fee of 4.228%, and that means $867 will be sent back to the Department of Education as a fee and will not be applied towards your account. It also has a 1% higher interest rate at 8.05%, which means you're going to have about $1,600 of interest accrue every year, which equals to be about $138 a month in interest alone. So an example for a 3-year grad program, you can expect that if you were to take out $61,500 in the Grad Plus loan, again, just to compare apples to apples, you can see total interest charges of $9,936 over a 36-month period. However, this loan does capitalize, and so that means all the interest charges that accrue during this period after you graduate will then become part of the principal amount with that $61,500. So your new principal amount after graduation would be $71,436 in this situation. That means that once capitalization happens, you'll have interest accruing of $479 per month. And over a 10-year period, that's $57,480 in interest. I'm not showing you these numbers to scare you. Unfortunately, loans can be necessary when attaining a higher education. However, I do want this example to be encouragement for you to only borrow what you need. Just because you can borrow it or you're planning on attaining public service loan forgiveness does not mean you should just accept all the loans offered to you. Again, only borrow what you need. Now, I think it's smart that while we're going to talk about the cost of a loan, let's think about what repayment options you might see once you graduate. There are 2 types of repayment plans. There's a fixed repayment plan, which is based on your overall loan debt, or there's the income-driven repayment plans, which is based on your income. For the fixed repayment plans, you have a standard repayment plan for 10 years, extended repayment plan for 25, and the graduated repayment plan for 10 years. Then for the income-driven repayment plans, there's income contingent repayment plan, the IBR or income-based repayment plan, or the new Saving on a Valuable Education or SAVE repayment plan. To help you give a good idea on what you can expect in regards to repayment plans, I ended up getting some information specific to your program. Currently, the average total student loan debt for a student in the DPT program here at the University of Toledo is roughly $84,797. In my following examples, I assume that the student in this case would take out $61,500 in unsubsidized loans over a 3-year period and have about $23,297 in Graduate Plus loans by the time that they graduate. Your repayment plan is going to vary based on your repayment goal and if you qualify for PSLF and potentially your household's income and family size. But again, in the next few slides, I'm going to give you some examples on what you can expect. So for some examples, let's look at the standard repayment plan first. This is a fixed repayment plan. And on this repayment plan, based on the information I gave you on the previous slide, you can expect a monthly payment of just under $1,000. You would end up paying over this 10-year period $119,871. And please note that this is not eligible for PSLF purposes. The extended fixed repayment plan is also a fixed repayment plan and has a monthly payment of only $617, much cheaper than the standard repayment plan. But because it's going to take you longer to pay it off, you're going to end up paying $185,000 in total on this repayment plan because it will take you 25 years to pay it off on this plan. And again, this plan is also not eligible for public service loan forgiveness. Next, I kind of go into repaying your student loans on income-driven repayment plan options. And we'll go over the IBR repayment plan and the SAVE repayment plan. In these examples, I estimated that the student in this circumstance would have about $70,000 in an adjusted gross income, assuming that they receive a 2% raise every year. Single filing status, there's only one in the household, they live in Ohio, and they have not consolidated their loans. All of this information can affect what your loan repayments are going to look like, but I wanted to give you the data first ahead of time. So the IBR repayment plan are payments based on your income. And again, based on the information I listed above, you can expect a monthly payment of roughly $401 to $565. If you do not achieve public service loan forgiveness, then you can expect that you would pay off about $114,898 on this plan. However, that would mean that you would be reaching forgiveness after 25 years because you hadn't paid off your loan by that point. And that means that you're going to have $94,000 forgiven under the term forgiveness program. However, that money is taxed. So let's say the tax is 30%, you're going to have to pay taxes 30% of that $94,000. But this plan is also eligible for public service loan forgiveness. So let's say you reach PSLF after 120 total qualifying payments. In the end, after the 10 years, you would be paying it off with $52,292 that you've paid. That means you'd have about $94,000 that would be forgiven and it'd be tax-free. But let's compare all this information to the SAVE repayment plan. These payments are also based on your income, but the monthly payment is only going to be $310 to $457. You can expect that if total to be paid off without public service loan forgiveness is about $113,000, almost $114,000. And that would mean you'd have about $63,000, almost $64,000 forgiven, and that would also be taxed. Under the SAVE repayment plan, you can also apply for public service loan forgiveness after 120 qualifying payments. If that were to be the case, total to be paid off would be about $40,114, and you'd have about $84,000, almost $85,000 that is forgiven, and that you will not have to pay taxes on your tax return. I would be remiss if I didn't also talk about other loan options. Other loan options are considered to be called alternative loans or private loans. These loans do not qualify for federal benefits, including repayment and deferment options. They are credit-based, and a cosigner will most likely be required. Interest rates will vary. They may be fixed or they may be variable. I always recommend a fixed rate. Just be sure if you decide to go that route instead of your federal loan route, then do the research before you commit. Check interest rates, repayment options, and deferment and hardship options. If you want to know what else you should look for, please feel free to email us at hscfinade@utoledo.edu and we can help you. Because student loans can be scary borrowing at so much money, I always recommend looking at different repayment assistance programs. Some programs have tuition assistance while you're in school, repayment assistance after graduation, or even living stipends. However, they often have a service requirement. But if you're willing to put in a service requirement and commit to that, that could help minimize your overall loan debt. I also want to include some scholarships. Just because you might not have received a scholarship your first year of the DPT program does not mean you might not receive one going forward. Every year, we open up scholarships and you'll get emails from the Office of Student Financial Aid and Rocket Solution Central detailing this information. You can always look through the scholarship search website to browse through the different scholarships available, or you can also look for external scholarship websites. Some other suggestions I have is to look at organizations you belong to, banks and credit unions, professional associations, and if you're employed, some employers also have scholarship programs. So let's talk about how to manage your overall loan debt. First, we want to limit the amount you borrow. I know I've said this before, but only borrow what you need. If you're able to, make interest payments on your loans. And be aware of what you're borrowing and keep records, and create an account with your loan servicer. Again, I really don't expect you to become an expert in financial aid and loans by any means. I just want you to be educated about your specific situation and your loans. Budget your personal expenses to reduce the amount of loans that you have to borrow to be able to pay for your everyday expenses. Seek out scholarships, assistantships, programs that offer tuition assistance. And if you're an out-of-state student, please review the in-state residency policy and procedure to become an in-state student as soon as possible. Now, the Office of Financial Aid does not help with in-state residency. However, I do find that this information can be helpful, so I wanted to provide it to you. The in-state residency application, I've included the link to be able to review the information in more detail. Ohio in-state residency is first decided during the admissions application process, and students who are determined to be non-residents of the state of Ohio are required to pay the out-of-state tuition surcharge. In order to be reclassified as an Ohio resident, students must prove residency based on the residency rule in the Ohio Revised Code. If you have any questions about the in-state residency application, you can always direct them towards Rocket Solution Central, and they will be able to answer all of your questions. I would also like to encourage you to take advantage of the financial literacy resources listed here on this page. They offer a variety of topics related to health programs, budgeting, borrowing, and even repaying federal loans. These programs are intended to help you become more financially literate. This is something you need to learn not only as a student, but this is information and lessons that you can take going forward after graduation. While I have you here, I wanted to throw in some information about why your credit matters. So first, you are entitled to one free credit report from each of the 3 credit bureaus once per year. Managing your credit will ensure you have access to loans such as the Graduate Plus loan, or a private loan if necessary. Building your credit while in school will make it easier to make large purchases later in life, such as buying a home or even getting a car loan. It does take some time to build your credit, but speaking from experience, when I was young, it does not take long to ruin it. So it's important you be aware of what's going on with your credit. Making on-time payments each month on your student loans, or really any of your debt, will help increase your credit score. Thank you so much for your time. I hope this presentation was helpful. If you have any questions, there are 2 resources that I would like to give to you. First is RSC, or Rocket Solution Central. Their email is rsc@utoledo.edu, and their phone number is listed below. There's also the Health Science Campus Student Services Center. Their email is hscstudentservices@utoledo.edu, and their email or phone number listed below that. I appreciate your time. We are here to help you, and I encourage you to always reach out to us if you have a question. Even if it's small, there really are no bad questions when it comes to financial aid and loans. Thank you so much for your time. I hope you have a wonderful school year.